Imagine this. The same billion-dollar private investments that used to be off limits to regular people could soon be inside your 401k. Sounds like a game changer, right? Well, Wall Street is all in, but it turns out, most Americans couldn't care less. Major asset managers like BlackRock, Apollo Global Management, and Blue Owl Capital are on a mission to democratize investing. They want to bring private equity and private credit, assets once reserved for the ultra-rich, into the retirement accounts of everyday Americans. But here's the twist. A new Harris poll for the Wall Street Journal shows that only about 10% of investors are unhappy with their current 401k and want exposure to these alternative investments. Even more surprising, nearly 40% of people have never even heard of private credit funds, and just 15% actually understand what they are. Private credit funds work by pooling investor money to lend to private companies and sharing the returns. It sounds exclusive, but when people were told how it works, 59% said they'd be interested in investing in private firms, and almost 90% said they'd be okay putting some of their retirement savings into private assets, though only about 30% would go beyond a small share of their portfolio. The enthusiasm gap. It's generational. Gen Z and millennials are far more curious. They're ready to experiment. Meanwhile, Gen Zers and boomers are sticking to their comfort zone, stocks and bonds. For Wall Street, this isn't just about inclusion, it's about opportunity. The 401k market is worth $13 trillion, and firms like Apollo, BlackRock, and Blue Owl are spending big to attract everyday savers. You might be seeing their full-page ads, or even Blue Owl's branding at the US Open. It's all part of a campaign to build trust and recognition, but not everyone's buying in. Many 401k holders admit they don't even know how their retirement money is invested. In fact, nearly 20% have no idea, and half rely entirely on automatic target date funds. And employers, the ones who actually decide what's offered in your plan, are nervous. Why? Lawsuits. If a private fund performs poorly or carries high fees, companies could face legal trouble from employees claiming mismanagement. Even with new government efforts to ease regulations, including an executive order from President Trump back in August, legal experts say the risk doesn't just disappear. Then there's the issue of cost. Average 401k funds charge about 0.28% in fees per year. Private market funds, closer to 0.38% or more. For investors like Logan Reed, a 41-year-old architect from Chicago, that's a deal breaker. As he put it, diversification is great, but only if the costs make sense. So, what's really happening here? Wall Street says it wants to open doors, but many see this as a push to tap into a new source of profit from America's $13 trillion retirement pie. Private investing can offer higher returns, but it also brings higher risks, long lockups, and less control. The big question is, are ordinary savers ready, or even interested, in walking through that door? Honestly, this feels like another chapter in Wall Street's endless chase for growth. They're not just selling access, they're selling trust. And before handing over your retirement to the world of private equity, it's worth asking, are you investing for your future, or for theirs? What do you think? Should 401k include private equity and credit funds, or should retirement accounts stay simple and transparent? Drop your thoughts in the comments. And if you want to stay ahead of the money moves shaping your future, hit subscribe and turn on the bell.